There are just two types of trades that result in losses. First is a perfect trade that just didn't work out. It was a AAA plus setup, had a stop loss in a logical place and a profit target at a sensible price level with lots of confluence, and it was exactly per your trading plan. The other type is a dumbass trade that you should never have done because it didn't meet one or more of the above criteria. When the perfect trade results in a loss, it's just one of those things. Some days the trading gods just don't want to make things easy for you. We're not psychic, we never know for sure where price will go. We can only work with logical price levels and probabilities, all the time looking for really good setups. Anything can happen in the markets. News, planned or unplanned, or a tweet from the President of the USA, for example, can move price quicker than a bullet and completely in the wrong direction for our trade. And, of course, there are times when we just get it wrong. There are several reasons why we might have got it wrong. We misread the price action. For example, it wasn't an impulsive or corrective wave after all. The price bars were telling us a bearish move was in progress when we were looking for a bullish move, or the correction hadn't finished. Or your stop loss was in the wrong place. Don't you just hate it when price just tags your stop and then moves in the direction you were planning for? That's not the brokers hunting your stops, it's just the way price action works. Picking the correct stop loss is an art in its own right. You have two choices with that. First, you can go for a few pips, allowing for the spread as well, beyond the last swing. For example, and remember, a wave 2 never goes beyond the start of wave 1. Or 2, you can pick a logical support and resistance, supply and demand level, and put your stop loss a little way beyond that. You have to balance the financial risk against the risk of being stopped, whilst all the time looking for the best risk to reward trade. That means the tighter stop to reduce financial risk often means a higher probability of being stopped, but tight stops do give the best risk to reward, so look for the AAA plus setups that tick all the boxes. Dumbass trades are the curse of many traders. Most will experience a moment of madness during the week, if not every day if you trade the lower time frames. Apart from the reasons as to why they are dumbass trades already mentioned, they occur because price suddenly made a big move and you didn't want to miss out, or you didn't wait for a bar to finish forming. A key level was broken and you thought price would be away, but it was just a bull or bear trap. You traded what you thought would happen rather than what price was telling you, etc. You can try to avoid dumbass trades by being more like a robot than a human, devoid of emotion and fear, acting on instruction, not on emotion, having and maintaining a trading plan where those robotic instructions are written. Stick to those instructions as if your life depended on it. Only risk money that you can afford to burn and don't be too hasty to protect a few pips of profit. You need the good winning trades to cover small losing trades and finish the day, week or month in profit. Be as patient as a Komodo dragon and as disciplined as a monk. Wait for the AAA plus setups and manage open trades with logic. What you do when you have a loss all depends on the type of loss. For the perfect trades, congratulate yourself for doing a perfect trade. They're not all winners. Your trading plan should include how many losses or percentage loss that you're prepared to accept for the trading session. So you would stop when that threshold is reached and wait for the next session. But if you recognise that your mind just isn't in the game, as happens to all of us, then walk away, take a break, do something different, then come back when you're in the zone for trading. For the dumbass trades, stop trading. As per previous slide, when you're not in the zone you need to walk away. It's easy to wipe out a month's worth of profits when the trading demons are sitting on your shoulders, urging you to get revenge for the loss and ignore your trading plan. You have to be brutally honest with yourself for the sake of your trading account. Want to know more? Check out the trader training course at for-exe.com/trader-training.